We're glad to have you back. Well, a lot of talks around the Lagos budget. Interesting stuff there. But let's move forward and talk more about the CBN's recent focus on promoting financial inclusion and supporting domestic production, which offers promising avenues for long-term growth. Meanwhile, experts say navigating Nigeria's monetary policy environment requires multifaceted approaches and a clear vision for the future. To put or provide some perspective to this, I'm being joined by an investment strategy manager. He's with AfriInvest West Africa, Mr. Temitope Omosuyi. He joins me from the United Kingdom. It's good to see you. Compliments of the season, Mr. Omosuyi.
Thank you very much, Tolu, for having me. Same to you.
Well, I know you've been following what's happening here. You've been reading reports and all. And recently, the IMF has come to say, well, some of these reforms seems like the way to go. We have to start seeing results at the moment. But first, let's start with these reforms, specifically what is happening around monetary policy. What do you make of all of this? Free market for our currency, free market for a subsidy, allowing demand and supply, decide the prices of all of this. Do you think that really is the way to go for us?
All right. Thank you very much again, Tolu, for having me. And really, we are discussing a very important, topic. And we're talking about the importance of market. And there's one thing about the market that you cannot take away from it is efficiency. Market is very efficient. You cannot lie to the market. For instance, if a monetary policy authority is saying that reserves is buoyant, or they are saying something contrary to the reality, market will definitely know. For instance, when we did not, at some point that we did not know the situation of the financial status of the CBN, market had already traded sufficiently that the reserve was encumbered. So what I'm saying in essence is that market is efficient, irrespective of what monetary policy authority does, which is why it is important to allow market to determine what happens, because at every point in time that market is suppressed, right, you would definitely have a lot of, you create a lot of arbitrage opportunities across the market, ranging from interest rates, interest rate markets, that is the fixed income market, exchange rate market, commodities market. We saw for PMS, as a result of the fact that we had subsidy. Subsidy would just ensure that PMS is not sold at what is market reflective. And as a result of that, we've been seeing incessant, frequent fiscality situation in Nigeria, especially in December. And if you go to FS as well, despite the fact that the CBN has taken some measures in recent times, the NAFEM rate, which is now the unified, rate compared to the several windows we used to have that was prevalent during the past administration, we have the rate at about 1,000 now, compared to parallel market that is about 1,200. So, due to the fact that we are delayed a lot to allow market to determine pricing, we saw those kind of setbacks. So now that we are talking about, allowing market to determine price, then we can begin to, talk about the interest of foreign investors, because that's what they want to see. And I think it's very important for me to mention that policies are means to an end. And the end will definitely justify the means, because right now we've been seeing reforms. You had already mentioned earlier that the IMF alluded to the reforms that have occurred in the last 6 months in Nigeria. Same with the report that was published yesterday by the World Bank that's about the macroeconomic update for Nigeria. They also itemized some of these reforms. In addition to that, much recently, Modi also upgraded the outlook for our rating from stable to positive. So all of that are just showing that yes, they are watching these reforms. However, Nigerians are less concerned about reform. Their concern, is all about the impact of this reform on macro variables that affect them. How are these reforms affecting price stability? So what I mean by price stability, you have to look at FS stability, interest rate stability, and commodity prices stability. So if these reforms are not touching the variables that I've just mentioned, nobody would really care, which is why reform is not just enough on its own. The action that comes with reform is what people are really, are really focusing on. So as much as we talk about market-friendly approach to policy, ranging from what the Monetary Policy Authority is doing and the fiscal authority, what are we seeing in the market? Are we seeing the fact that these things are happening? Are we seeing a convergence between the official rates and parallel market rates? The reality is right there in front of us. NAFEM rates, like I mentioned, 1,000 or slightly above that, and parallel market is 1,200, naira to a dollar. So we have to also watch and make some of this push aggressively the implementation of this reform, because in the next 6 months to 1 year, investors will begin to look at numbers. They will look at the inflation condition in Nigeria, look at the exchange rate, look at capital importation, what's the health of our fiscal policy in terms of a fiscal condition. They will look at our debt service to revenue ratio, debt stock to revenue ratio, external debt, among other things, because by then they would have given us enough time to really bring these reforms to numbers, because what they want to invest in is numbers and not just reform. Reform is a pointer that we are on track. However, numbers, facts, because are what investors would want to, really invest in or assess before bringing their money to Nigeria. Yes, we have seen a couple of very interesting reforms by the CBN, ranging from the fact that they had narrowed the asymmetric corridor around the monetary policy rate. That is, they reduce it from about 200 to 700. It's now narrowed to around 500, so as to ensure that as they are changing monetary policy rate, is also reflective in the capital market and money market. Same thing, at some point, we didn't even hear about Omo anymore. But as after the this new administration, like when they came aboard, they started, Omo, and Omo is very important when it comes to monetary policy. And in addition to that, we also saw that they have lifted restriction on the about 43 items that could not have access to FS. All of those are pointers to, the kind of reforms that market wanted from the outset. And for fee subsidy as well, we talked about the fact that it's been removed, right? Although there have been a bit of controversy around if it has been fully removed or is still a gradual thing, because if you look at PMS price in Nigeria, a liter, and you compare to what is obtainable across country in the UK, Canada, and all that, if you just do a comparison by not considering any noise in the calculation, we should begin to see over 1,000 naira to for a liter in Nigeria. But there's still a bit of controversy around that, and there's still the fact that NAFEM rates and parallel markets are quite different, which shows that in that regard, there is subsidy. And the last point, which I think the CBN has pushed forward, is interest rate subsidy. This week, the CBN, the central bank governor, mentioned unequivocally that they have stopped developmental financing. In fact, this is very laudable, because that was exactly what we complained for the last 8 years, that the CBN shifted attention from the main focus of price stability and financial system stability to more like quasi-fiscal policy strategy. But the CBN governor, in fact, he mentioned that yesterday at the program organized by the World Bank, that they have stopped it and they will allow, programs that are still ongoing. They think that it has, a substantial impact on the economy to complete, but new developmental financing will be stopped, which will help them to now focus strictly on their objective, which is price stability and financial, system stability. So by and large, those policies and reforms are good, but Nigerians are waiting for the impact on their lives, price in terms of inflation, exchange rate, among other areas.
Deep one there, Mr. Omosuyi. Now, many would say tightening of monetary and fiscal policies will be the way to go when issues like this pop up. But I want to ask you that on the other side, which is the fiscal side, many will say revenue is needed. And Taiwo Edele-led committee is trying to do everything to harness tax, of course, tax opportunities within the tax net and non-oil space to gather in some money. We also expect some monies from subsidy that has been taken out. So do you think that all of this can help us ramp up revenue to support at least some developmental projects or even social infrastructure programs?
Yes, I believe that these reforms from those policies that are being put together, in fact, interestingly, we'll be seeing communication by Taiwo Yidele and the market different areas from the legal stands, capital markets, small and medium scale enterprises. This committee has been interfacing with different groups so as to get their views and to address areas that will be a win-win for both parties, not a zero-sum game where the government will win and these groups will also win. So really, those moves are laudable, right? And we have also seen that, yes, you talked about increasing interest rate being a major instrument at the disposal of the Monetary Policy Authority to address inflation. But that could be a bit tricky because if you ask ourselves what the factor driving inflation is in Nigeria is quite different from what is obtainable in advanced countries. As a matter of fact, we have seen in recent times, right? We have seen substantial increase in interest rate, right? MPR increased from less than 12% to over 18%, but money supply kept growing by more than 10-15%. So increasing interest rates is just a policy tool. The transmission mechanism from interest rate to money supply and to the economy in terms of how money supply, which captures aggregate demand, will affect prices is what is of the essence, which is why the CBN has made it clear, and we also want to continue to encourage the authority to remain committed to that threshold of ways and means, because it's possible for interest rates to keep growing and ways and means is rising, which is a subcomponent of money supply. So it's not just about interest rate increase. That's my point. Because if interest rate is increasing, right, and money supply is also growing, inflation would be a problem, right? So as much as, yes, the fiscal authority is looking at how to mobilize revenue, right? Mobilization of revenue is for an end. And the end is for fiscal authority to have enough money to spend on infrastructure and growth, areas of the economy. So there has to be a delicate balance because you see businesses in Nigeria are going through a lot, in terms of high cost of doing business. So government at this point, they now have to strike a very delicate balance between managing the huge fiscal deficit. This year, government is looking at about 9 trillion fiscal deficit. So it's just a bit of a decline from what we saw last year, about 12 trillion, right? 9 trillion this year, and that's just barely about 6% of GDP, so higher than the threshold. However, the trajectory is a bit disturbing. However, they have to manage a delicate balance if they want to drive revenue aggressively and also encourage businesses, because if they are too aggressive with revenue mobilization, entities, companies that are, that are employing people, if there are more taxes on them, that could create, more problems. So I think the conversation has been around how to become more efficient with government tax collection, which has to do with, also addressing areas that are covered by non-state tax collector. We see a lot of them in Lagos. You see people collecting money from the informal sector, this informal markets, and they don't get to the government. So they are looking at this. I think they are looking at approaches to address all of these areas. In fact, many people pay taxes in Nigeria directly or indirectly, but does not get to the government. So I think the attention, as they have just started, to do, they should continue to focus on the efficiency and not just increasing tax. And for Monetary Policy Authority, we like the fact that they are now quite focused in terms of their mandate. Just focus on price stability, financial system stability, and leave Ministry of Finance and federal government to addressing those factors that they should focus on. And on inflation, yes, you know that they will have to address money supply. That's the limit they can go. They should just allow the fiscal policy to address issues around infrastructure, issues around the food production, right, and energy security that have continued to contribute to elevated price level. You know, it is even more interesting at this time because wherever you see the minister of finance, you are most likely going to find the CPN governor. So that could be signaling, is trying to, that shows the market that there could be a kind of synergy in policy direction. So which we think that is ultimately good for the country. But we understand that, yes, it will take a while for some of these policies to have impact on Nigerians. But critically, the CBN must ensure that communication there's communication and there's guidance. So I just think that, as they have stated, which is about the communication, there has to be commitment to the later to ensure that these policies are implemented right from the monetary policy to the fiscal policy authority.
Another interesting one there. But you commended the central bank for pulling out of some development financing, which everyone has been commending. True, I would say too, because at a point the CBN was almost intervening in every sector of the Nigerian economy. But what sort of interventions are you now expecting going forward from the Apex Bank?
We don't expect any major intervention from the CBN that does not address the key objective of the central bank. As a matter of fact, interventions are not within the purviews of the central bank, governor or the central bank. In fact, the central bank governor stated yesterday that they don't have the capacity to do developmental financing, because if they want to finance different sectors of the economy, they must have expertise in those areas. If you want to finance agriculture, then you must have people that will follow through the value chain, through the project circle, from the inception, evaluation, monitoring, and all of those processes. They must have someone that will go, but they said they don't have the capacity. So, which means they should just focus strictly on how they will use the tool of monetary policy to address, their core mandates: price stability, financial system stability, which by extension will affect financial inclusion. To address issues about food security and the energy security is largely tied to the federal government, is largely tied to the fiscal policy authority. So different interventions that we expect in the economy should come from the fiscal authority, ranging from addressing issues around, electricity supply, road network, employment, mentioning agriculture, among others. So I don't expect any major intervention from the CBN. What I think they should do, and which they are committed to doing, is just to begin to use their direct and indirect approach to address the objective. Which their direct approach is, they just use those OMO, they use interest rates and all of those standing lending facility, deposit facility, among others, to ensure that money supply is at optimal level. And I think, interestingly, I remember that when the CBN governors spoke at a CIBN program, they talked about the fact that they had not set up a team at the CBN that will focus solely every day to continue to monitor optimal money supply level in the economy, so as to manage, price stability. As government is addressing agriculture, energy security, and all of those issues that would affect price stability, the central bank would just focus on money supply and how that affects exchange rate. Because today, if I give you a billion naira, what comes to your mind is how you want to import some things that interest you a lot, and maybe you could not afford sometimes back. Or if you give Nigeria huge money today, that's what they think about, importation and all of that. So, which is why it is important for them to keep managing the angle of naira supply that have continued to put pressure on the FS market, because that has it has an attendant impact on price stability. So on intervention, I think we should just leave the federal government to that aspect or that area.
So when are we going to start to see the right word is impact of some of these decisions on both sides now, fiscal, monetary side? You know that, or you would agree with me that the impact of the removal of petrol subsidy is still hitting hard, and everyone is talking about it, impact on prices, purchasing power of Nigerians, and all of that. So when do you think that we'll start to see results in the short, medium, and of course, long term? I know it's not an overnight thing, but can we just have a little bit of projection?
Yeah, I think if you have to go by case studies of countries that have taken this kind of reform, for instance, Egypt had this kind of reform in 2015, 2016, right? And what we saw was that inflation rose from about 12% to over 26% in Egypt within 2 years. It took the third year before inflation started decelerating and unemployment became better, and they now enjoyed a bit of FS stability and level of improvement in economic performance. So if I'm to go by those numbers, right, it could take a bit of time, say 2025, before Nigerians will begin to see the impact, like traceable impact, not just by numbers. Numbers, it's possible for inflation to decelerate, and people on the streets will tell you that they cannot feel what you're talking about. You're telling us that inflation decelerated from 27% and it's now 20%, but things are still expensive. We can see all of that in 2024. Exchange rate could remain stable around 1,002, 1,003. Inflation could come down. Fiscal deficit could adjust a little because of maybe more earnings from oil. Oil production has improved and prices are relatively stable. So we could begin to see impact on numbers, but palpable impact that will be fed by Nigeria. It could take a while, say as long as 2025, 2026, because policy reforms are major disruptions, and disruptions come with pain, right? So I think that in terms of the exact impact on people, we should begin to look at 2025, but impact on macro numbers, we should begin to look at Q4 2024.
Q4 2024. Well, let's see how all of this plays out. A lot of work really needs to be done. As an investment person, before I let you go, what do you make of Nigeria's drive to attract more investments into the country? We see what the president's been doing, going from one country to another. What do you make of it, and how attractive is Nigeria at this time?
Investors are looking at the reforms. They are watching keenly, but they want to see the numbers, right? Investors don't bet on talks and reform outlined on paper. Investors want to see that your reserves has increased from $33 billion to $50 billion. They want to say that exchange rate remains stable around 1,002 or 1,005, whichever level, for a very long time. Investors want to see that they bring in money and they are able to take it out. They need case studies. So what I'm saying in essence is that as much as we have seen conversation, road shows, right, by Nigeria in London Stock Exchange, in New York, Stock Exchange, and a couple of others. These are just to show that, yes, Nigeria is ready for business. But foreign investors, whenever they do their presentation to consider a country for investment, they look at numbers. What is happening to those variables that I've just mentioned to you? Interest rate. What is happening to companies in Nigeria in terms of profitability? Do we have more investors, FDI coming to the country? What are we seeing in terms of, legacy issues, the legal system, and, among other issues, insecurity and all that. So investors want to see numbers. They want to see improvement into our balance of payments. That shows the health of our external sector. They want to see that GDP is also growing substantially. A 2.5%, 2.7%, or 3% is not enough. They will want to see all of these numbers before they cannot begin to bring money to the country. Although we know that what is happening in the Eurobond market right now could help the government in terms of, getting some FS inflows into the country by issuing maybe Eurobond next year, because yields are now coming lower. That could help the government, to borrow some money and prop up reserve, because investors want to see that if, they are able to take away their money whenever they want to do that, once they inflow their resources into the country. And the major parameter is strong FS reserve over a long period of time. The conversation is still about the percentage of CBN's reserves that is encumbered. The last number we saw, right, the financials that we saw was just for 2022. Do we know the extent of encumbrances in 2023? Not yet. So they can begin to extrapolate, looking at the numbers, and just discount it by a certain percentage, and they begin to feel that it could still be a bit of encumbrances here and there. So once we have improvement in reserves, once there's a protracted price stability, substantial economic growth that mirrors a bit of our purchasing power, all of those numbers are quite critical for us to get substantial level of investment, irrespective of the category. Foreign portfolio investment, foreign direct investment, all of that, those numbers are quite critical. Even if we talk about the reform, it gets more policy strategy, and we put the papers out there, as many as all of these things we put out there. If it does not translate to numbers, investors should stay on the sideline. But once our number improves, you should expect that they are all going to come to Nigeria, because all they want is return on investment. Investors are not essentially, emotional about any country. What they want is return on investment, and even return of investment. ROI, people say it's return on investment. They also want return of their investment. Are they able to get back their money when they want to exit the country, even if they have not made anything? So those are the questions that we need to answer, and what we continue to watch going forward.
I must thank you so much for your brilliant contributions on the program. Mr. Temitope Omosuyi is an investment strategy manager. He's with AfriInvest West Africa. Thank you so much. You joined us from the United Kingdom.
Thank you, Tolu.